The Department of Agriculture says South African farm exports to the U.S. have seen strong U.S. exports performance in the second quarter. This is in the face of significant global trade headwinds. Agricultural Minister John Steenhuisen says recent data shows that South African exports have not only remained competitive, but have increased to $161 million. Agricultural economist Wandile Sihlobo joins us now to unpack the meaning of these developments. Wandile, good afternoon. Thank you so much for your time. Really do appreciate it. Perhaps outline for us what the important indices and data points are for us to track the effect of the tariffs on a quarter-on-quarter basis, and why the export data that we have now are important data points for us to keep in consideration.
Look, we put out that data earlier yesterday, and I think it's important to locate it to a broader activity for the first quarter, which is that for the second quarter, which is that if you look at how much South Africa sent to the world, we sent out agricultural exports of about $3.71 billion US. That was up 10% from the previous same period last year. And if you were to ask what are the key drivers of that, the one aspect was the fact that we genuinely have a fantastic agricultural season in fruits and in grains more so, and of course on livestock we still struggle with animal diseases and other things. Now, the U.S. market is part and parcel of that. It is about 4% again of our exports, even in the second quarter, but having shown that massive jump of 26%. We are monitoring these exports closely because, of course, we want to see where the pain points of these tariffs begin to come in. But I think that massive jump into the U.S. is two factors behind it. One is the fact that we've had a fantastic citrus harvest, so the volumes were great. Two, there are many stakeholders and traders that were actually really pushing the volume within this 90-day pause, which is why the jump was as that, because it's not just a base effect factor. It's really the sense that second quarter, even first quarter of our exports to the world and to the U.S. as the farming sector were just fantastic.
Well, how would we evaluate the effect of the tariffs? Would we evaluate it on the 4% market export share, or would we evaluate it on the increase or decrease quarter-on-quarter of the increase in export quantities? 26% jump in the previous quarter. You say, of course, they took effect of that 90-day pause. Or do we say, ooh, it's no longer 4% of total exports, 3.71 billion. Therefore, it has taken a knock. How would we evaluate that contemporaneously?
I mean, I think it's your latter point. You are 100% correct. When we go to the third quarter and the fourth quarter, we'll have to see how much of our exports are going to the U.S. Because the bottom point is this: in monetary terms, forget now the share of it, but we typically send just around $500 million US of agricultural exports to the year. That's the average long term. The minute we begin to fall below that average, that is one of the ways of actually seeing if the volumes going to the American markets are declining. We have always been sitting with this sense of slight optimism because we are hoping that the discussions that are underway, led by the DTIC, DERCO, and those that are in agriculture, amongst others, would yield a better framing. Because the other thing that we are watching closely are the tariff levels to our competitors in the American market. Because our competitors as farming sector is the likes of Peru and Chile. Right now, they have an edge above, because they are sitting with a 10% tariff, which means that their products are more affordable than where we are sitting. So what you and I and many South Africans have to watch closely is what will the export volume be on the third quarter as well as the fourth quarter, of course, assuming that no material changes on the tariff, because the sweet spot that is good for us to compete with the South Americans in the American market is a tariff that is anywhere between 10 and 15%. That is the space at which we can play. But of course, everyone wants to have no tariffs. But I think that's the place relative to the 30% that we are currently facing.
Would we consider it a net negative effect if that 500 million in projected U.S. exports pops up in another market and it's just diverted elsewhere? That is to say that the overall exports hasn't reduced significantly, or would we still consider that to be a negative effect?
Look, the difficulty of looking at the South African agricultural sector is this. We are in a sector that is growing and growing at speed. Over the next 5 years, we anticipate that the fruit volume that will be available for export will expand by plus 30%. Now, we could suddenly see, as an example, a significant increase in exports either to China or any other market. But it will be difficult to judge if it's mainly a switch on what used to be sent to the US, or is this new fruit that is coming into the market and suddenly going into another market? But I think overall for us as South African, what we are looking at is that the overall export volume must be growing to the world market. Last year, we were at 13.7, and we're hoping now that we will cross 14 billion US dollars. So judgment will be difficult, but we want to see growth in exports in other geographies.
Wandile, does your model impute in it the externalities such as the downsizing of Maersk, the global supply chain operator, of course, that operates in the US-South Africa sea route, saying that they're downsizing their operations. They're meaning that exporters will have fewer vessels to be able to, of course, export, and it might be a downturn effect on that, or is that not calculated into your model?
I mean, those are some of the new evolving insights that we've all learned about in recent weeks, and we are watching to see how that will impact the logistics now at the ports. But there's one thing here that I will quickly say, which I think it's important to give credit to. Our colleagues at Transnet, for us in agriculture, they've done fantastic work in the second quarter and the first quarter of this year. We did not experience as much logistical challenges as in the recent past. So we want to see that momentum continuing. But of course, in all of these global shipping line developments is something that we are watching, but we haven't factored it much more now. We will be looking at what the developments in the logistics and who comes into fills what space. That's something we are watching closely.
Thank you so much for that. Really do appreciate it. That's Wandile Sihlobo, agricultural economist.